Happy Friday, traders. It is 8:01 a.m. Chicago time on Friday, the 8th of March, 2019. It is non-farm payroll morning. The non-farm payrolls are the headline today. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk off. The non-farm payrolls came in really terribly low. We had an expectation of 180 to 181,000. We got 20,000. Private payrolls also took a hit, 25,000 versus 170,000 expected. The unemployment rate ticked down by a tenth of a percent or 10 basis points, 3.8 versus 3.9. Also, the White House trade advisor Williams came in and said that the trade talks are progressing well, but there's a lot of progress to be made on China. And so overall, the market's reacting as you would expect. The non-farm payrolls release caused a dip of about 8 points almost immediately in the ES, and it has not recovered since. We just tested the low by short by a tick, 27.30 and a quarter in ES versus 27.30 overnight, and it's really sellers. Sellers are in control. We have a gap down again this morning in ES. The leader is the VIX. The VIX has jumped up 5.23%, 88 cents. It has dipped all the way down to 14 in recent history, and now it's pushing a little bit higher. I expect ranges to expand and continue to be expanded as we've seen over the last couple of days. The bonds are up. The bonds are up 5 ticks. The 10-year notes up 4.5 big ticks or 9 small ticks. And the euro, the Japanese yen, and gold are higher. Gold is just flirting with 1,300, trading at 1,299.50 cents. Crude oil's taking a hit. It's down 3%. Crude oil inventories came in pretty strong yesterday. It's down 3%, $1.70. The Nasdaq's the weakest of the indices this morning. So that's the recap of sentiment. Sentiment, again, risk off. This is what we have going on today. We've pushed away from the balance area that we had above from the middle of February in ES, and are actually pushing towards the big point of control beneath that we have beneath us. It's resting at 27.37 currently. Let's take a look at what's on deck in terms of the calendar, what's remaining. The calendar really is clear for the rest of the day. Let me refresh this. It's pretty much clear for the rest of the day. There is the WASD report at 11 a.m. And then tonight we get China's inflation rate. That could be a major release. And then there's a speech by Fed Chair Powell at 9 p.m. Central, 10 p.m. Eastern. Of course, we'll all be enjoying our weekend at that point. But that's what's on deck. I don't have really much of a review to do because I didn't do a trader bite yesterday. I had rolled to, and by the way, if you didn't see my tweets, I rolled to June 2019 yesterday. That's the official roll date. I'm trading ESM9 or ESM19, and so that's what I'm quoting. So I'm not quoting March, so you might be confused by the prices I gave. I'm not quoting March. That's why the MC point of control is 27.37 instead of 27.31-ish, 31.5 or so. it's because we have rolled and therefore adjusted all of our prices up between the March and the June contract by 5.5 points. That's the premium carry forward to the next contract for ES. If you're looking for the rollover premiums for the various products, there is a tweet out there that I put in yesterday. You can find that on twitter.com/futurestrader71. You don't have to have a Twitter account to be able to see it, but there's a table there that shows the relationship. So looking at the overall picture, we exceeded the prior high, 28.19.5, if you recall, in March. That was 28.14. We exceeded that to 28.23.50, and then we had this really big down day on Monday, and we took back a week's worth of range in that day, and then recovered, traded the middle of that range at 2,800, right in the mid. And then from there, we've been drooping down, and what we have set up to do is we have basically a push, an extension, and then we're doing the correction. So the expectation is at some point we're likely to have a pop and then potentially continue lower. We're trading down at 20. Whoa. We're at 27.28 currently. So we're continuing to extend this move lower. We are beneath the 200 moving average on the cash. You want to watch the cash, although I have the 200 average on the futures here and the 50 average. We want to keep an eye on those on the cash, on the SPX contract. I do just look at these for reference to pull up the other chart, but just make sure you understand that really we are one time framing down on the daily. We're not able to exceed the prior high. The trend is down. Yesterday, the action was relatively clear early on to me as to what its intention is. We did manage to have an open test drive, opening type. We opened at 27.71.75 and we pushed up to 27.73. We left a small gap. Let me pull that up. A lot of rotations yesterday. The volatility is actually welcome. So here we managed to push up to 27.73. It looked like an open auction, and it pushes up to 27.73. And what happens next? We have a strong push to the downside. I saw that as driving behavior, so we tested to see if there's any interest to the upside right here. And then we had a strong rotation down. That's when the sirens went off. And it became an OTD type open. That's defined as an open test drive. It's when a market moves directionally or auctions non-directionally or directionally in one direction. It looks like an open auction. And then you have the opposing force stepping in and really driving prices. This is a drive down. It's an impulse move. So here, once we see that, we know very early on you do not trade from the outside in. In other words, we don't buy this. We don't try to buy this for a shot at pulling it back into the market to push back into the center. We really need to be focused on selling up rotations. Generally, anything between 2.5 and 3 points, I'm going to look to sell, because generally when we have these drives, I tend to sit on my hands all day. But a counter rotation of about 2.5, 3 points gives me about 3 more points for a stop, and a 6-point counter rotation on a trend day down is very rare. So I'm just playing the probabilities here to get short, and I'm treating all those shorts as scalps because I don't have structure to trade against. In other words, I don't have areas of confluence and things like that to trade against. So I just look to scalp from the short side, and if it runs, then I try to hold on and add on the next rotation and keep that average lagging. So that's what we had yesterday. We directionally pushed. We had a really wide IB yesterday, but still the IB stat held up pretty well. We put in an IB of 2747 to 2773, and overall it looked like, oh my God, we're going to be stuck in the middle here as we push to the mid. But we ended up failing lower. It did try to recover. This move right here was the first indication to be cautious on the sell side. Once we see a move like this, a big rotation up like that, it's time to back off of the short side and a trend down. And it just sat sideways. Not much to read or do here except for scalping, really. And then when it starts to fail, when it started to fail over, now we could bring that IB stat back on deck and shoot for 2747. And there it is, 2747 being broken. And then it comes back up. This low, I announced it fairly, hopefully timely for many. This low, once it was put in, we could see that the effort by sellers was weakening. We could see a good taper on the profile, and I did announce that this low looks like it is likely to hold. So if you're looking to the short side, you need to exercise more caution. That was the extent of the extension down from 2747 to 4375. The market just could not muster more selling, and then it ended up pulling right back towards VWAP, where the point of control shifted and held steady into the close at 2754.50, as you see there. So that's yesterday's recap. A clear selling day. However, what's really interesting is even though we sold off, we had an OTD, we had some driving behavior, you look at this profile and it really doesn't, it's not characteristic of a trend day down. Trend day profiles tend to look like this, okay? And then you have a point of control near the lower quartile of the range, but generally you have a market that is not able to find consensus on price and ends up settling towards the end of the day, ends up settling near the lows, and then generally we look for a continuation, for it to flag into the close and a continuation lower in Globex once the Asians come in and the Asian markets come in and Europe comes in and continues to sell in sympathy in general. But yesterday, that's not the case. Look at how balanced this profile is despite the selling. So we had really good selling on the open. Okay. We had a sort of a bear flag, right? And then we had the continuation trade right there. So this is on a bigger time frame. And then we established another bear flag type of pattern, at which the overnight session came in and took that down, likely to establish another bear flag, and so on and so forth, right? Very neat kind of orderly behavior. This is what generally comes with higher volatility. The market tends to trade a little more purely. But what has me kind of scratching my bald head is this profile that was really balanced. Like the value area here at 27.49 a quarter to 27.60.50 is actually valid. We have a somewhat of a Gaussian profile going on as opposed to a jagged profile like we normally see on a trend day. I thought that was really interesting for when we do come back into this area. So anyway, enough of the review segment here. The overall action continued overnight. Let me pull up that chart. So here's the overnight action. Just, market kind of flagged up on a bear move on selling, And then what we had is, well, sideways, but then we had this selling some more, flagging up a little bit more, and then sideways as we anticipate the release of this non-farm payroll. Non-farm payrolls come in right here, and we're creating another impulse, a continued impulse down as we explore lower and lower prices. We're in the mid of the gap from early February. There was a double bottom here, as you can see it outlined by the master levels here. There's a double bottom, the 5th and the 6th. This is a key area for buyers to kind of defend the Alamo, so to speak, and for this to start rotating up. My expectation, given the flow of the auction, is that we're likely to start walking up a little bit on the open before sellers might come in and take this even further down, given that the numbers being digested. It was a lot cleaner when it wasn't a 24-hour market, because you can literally, between when I started in 2000 to about 2006 or 7, you can literally take the overnight action and expect something like this to just continue. It's generally, with a high probability, it'll just continue on the open, because desks start trading and then they basically take their position at that point in the equities, pushing the product down. But there's so many products now you can be positioned in before the cash open that it's not as it's more muted. It's more kind of stable, so to speak. Great for the overall market, not so great for traders. Look at this profile. We've got about 3 distributions here. A really good volume, really good range in the overnight session. I expect that to continue to carry forward today. So I know there's a lot there to digest, and there's a lot that's going on. But overall, I'm expecting. What am I expecting for today? Let's shift this forward here. Overall, let's move into our segment for what we'll expect, at which point I have to hit you with this. Please take a moment and hit the like button if you can find it. It's like Friday. Just grab a quick second before you leave today and hit the like button, please. I'd appreciate that. My expectation for this morning, an open that's likely to be more directional. I'm looking for an open that continues to move down, pushes this 27 area. I'm looking for a response, an impulse up, a response back towards yesterday's range. I'm looking for it to hold steady in this 27.37 area. This is an MC. This is the most traded price in the last year, including the current 2 months of trading. So I'm looking for this to revert back and then finish somewhere in the middle. This is what I'm expecting. I'm looking for the market to hold a gap above. I'm not looking for the overnight point of control. Statistically speaking, the overnight point of control gets touched during the day session about 85%. I think it's 85.5% of the time, according to Convergent's latest statistical cheat sheets. But I don't expect that to happen today. I am looking for the overnight low to be taken out. Obviously, the overnight high is a lot higher, so it's a lower probability, but this is what I'm looking for on the primary. The secondary is it does get, it reverts back fairly early, holds steady at 27.37, makes an attempt at the high, impulse down, comes back to the low end of the overnight range, and then just holds in this area, and then also ends up somewhere in the middle. I expect this to be somewhat of an island day, or a day where it gaps and just holds midair, like you're seeing there in the image. This is what I'm looking at. It's been a long one. Good luck, everyone. It is Friday. It's likely to slow down fairly quickly. It's likely to slow down fairly quickly given that it is Friday. So after the European close at about 10:30 Central, 11:30 Eastern, make sure that you're aware of where the market is and what the context is, and maybe start to back off on how aggressive you are with your trades. Good luck.